Today I have the pleasure of speaking with Paul Zink from Rare Element Resources. How are you today, Paul?
I'm well, thanks, Tracy.
Paul, I'm so happy to have you here because I get to ask you the most pertinent and critical question of the month, which is, how did you get Rare Element Resources to move the stock up 177%?
Well, we enjoyed floating up with all the other boats in the tide, but we've been doing a lot of work with investor outreach and getting the story out, and I think it maybe paid some dividends this time.
Well, as much as I appreciate that interpretation and translation of how you achieved it, I think maybe it had more to do with the demand coming out of China for projects with dysprosium and terbium. Do you think that had anything to do with it?
Well, we do have what we think is one of the best projects out there, and certainly all the news we hear is that the Chinese measures to consolidate the industry, to manage their environmental impacts and so on, are paying off, and that illegal mining is falling, and that is helping the supply situation, and therefore prices.
Well, let me take it a step further. We're also getting confirmation of the Chinese planning on stockpiling these same heavy rare earths, the ones utilized for permanent magnets. So if you don't know the Rare Element Resources story, you're the guy to talk to. Would you mind giving us a quick overview on why so many people in the industry are looking at you as one of the top, if not the top play to invest in?
Well, we came out with great results in a PFS last October. We have a great distribution of rare earths, particularly the critical rare earths in our ore, and you know, the critical rare earths are getting a lot of attention. You know, we have heavy magnets, which is the fastest growing sector, and you know, that's got to be getting us some attention, we believe.
Okay, can you break it down a little further for us? Which heavy rare earths do you have? Because I know a year ago we were trying to re-educate some people in the audience that did not understand that you were not just a light rare earth play. You actually are a heavy rare earth supplier potentially in the future.
Well, we like to think of ourselves as critical rare earths, which includes some lights, some heavies, mainly the lights that go into magnets, and then dysprosium in particular. Some people, even though it's a mid-rare earth, I think generally considered, or even light, europium is considered one of the criticals, and some people see that as a heavy. And we've got maybe the second highest grade europium deposit in the world. So with the dysprosium that's there, and in one of our satellite deposits, it's as high a grade as several of the so-called heavy rare earth deposits out there. We're fortunate to have just a great concentration of the rare earths, great distribution.
And because you're the finance lead over at Rare Element Resources, can you give us a little bit of the overview about the financial health of Rare Element Resources?
Well, we're fortunate that we raised a lot of money when things went up in 2011, and we've been spending it very judiciously to advance the project. But we still, at the end of September, in our latest released results, we still had $13 million on the balance sheet, and in our sector, that's a luxury. We've been able to continue to advance the project and spend money where others have had to cut back. And we're fortunate. We've got a great project. We've got a good balance sheet position. We've got a great team, and we think we've got a world-class resource.
Well, there's no debate that you do have a world-class resource, but of course everyone in the industry is wondering how you're going to handle the billion-dollar processing facility that has to be built. Can you talk to us a little bit about that?
Well, we have the good fortune that our initial capital is only $290 million, which again in the sector is low. We have also the good fortune that our work has produced a very, very pure mixed rare earth oxide concentrate. And when our chief operating officer and I were in China in November meeting with a separation expert at one of the Chinese big six, we were told that material ought to be very low cost to separate, which we agreed with, and is why we were doing our own separation research. We went on in the conversation a little further, and he said, "Why wouldn't you do this yourselves?" And we said, "Well, we're working on that, and we're continuing to have success." In our view, we've been told by Asian separation experts that a separation plant for us could be as low as $50 million. We don't have to build a separation facility that has a huge front end to take out impurities. because we've already done that in our concentrate in our hydrometallurgical process. That means a much smaller plant. We have the potential to remove cerium, which reduces a lot of the mass which will go through our plant. And it means we could be very competitive and low cost.
So your Capex, OpEx costs are competitive with the rest of the industry, almost a third of what we've heard on the street of what's actually needed. Is that correct?
We think we will be very low cost, not only against the non-Chinese projects, but certainly if our separation research works out, maybe even against the Chinese.
So in addition, of course, to being Capex, OpEx, a third of what many of your competitors are currently claiming they're going to need and require, you also have just announced Wyoming government support. Can you tell us a little bit about that?
Well, we have an executive that works very hard on our community and government relations who has done a great job with the state of Wyoming. Wyoming is rated as the second best state in the U.S. to do business in. And we have the good fortune that it's still rated in the top 10 by the Fraser Institute to develop a mine. And it's a resource-oriented economy, so they understand the resources. And we got unanimous support in the Wyoming legislature. And a resolution passed that the governor signed to give us not only their stated support on paper, but a nudge to the U.S. Forest Service that's doing our permitting to keep that on track.
So what's your vision for rare element resources for us, the shareholders, say in the next 2 quarters, Paul?
Well, I would hope all this news on the support side, the work we're doing to find strategic off-takers, and particularly success on the separation side could help the market view us very differently than the larger competitors in production. And we think we're taking a different business model, a different approach that's prudent, that's conservative, and we think we'll be successful.
Well, thank you so much for joining us today, Paul.
Pleasure, Tracy. Thanks for having me.